Welcome back to Alpha Recap, your quick wrap of the market after the close. We've got a lot to unpack from today's risk-on session, and as always, if you have questions, you can reach us at stockalpha.ai.
Love it. Big day out there. Markets closed up and it felt like risk was back in vogue. We saw the S&P 500 finish up about 1.9%. The Nasdaq 100 closed just over 2% higher, and small caps led the charge, with the Russell 2000 up about 3.5%.
Yeah, that small cap pop was the headline for me. When your small caps are outperforming large cap growth, it usually means traders are rotating into more cyclical, domestically focused names, materials, industrials, energy, basically a vote of confidence that the rally could broaden beyond mega cap technology winners.
Exactly. It wasn't a one-trick pony. Tech and cyclicals both ran, which is a healthier look technically. Investors bought growth, AI and cloud names in particular, while also leaning into higher beta, smaller companies. That combo suggested conviction rather than just a fleeting bid into a handful of names.
Let's dig into the drivers. Headlines around big cloud and AI deals, things like Google and Microsoft offering attractive arrangements, plus chatter that Goldman Sachs was tapping an advanced AI model, really helped the software, cloud, and AI supply chain. That momentum lifted the large cap tech complex and supported the Nasdaq.
And the Goldman Sachs item was interesting because it's a banking name showing up on an AI headline. It's a reminder that AI isn't just a software story anymore. It's bleeding into workflows at big firms and potentially into revenue and efficiency gains. That helped sentiment across some financial adjacent names, even if the broader financial sector lagged.
Right, banks generally underperformed, but pockets did well where deal flow or AI adoption made sense. Meanwhile, the small cap bid was pretty obvious. Traders rotated from defensive postures and mega cap only positioning into cyclicals, industrials, materials, energy, which pushed the Russell 2000 up mid-single digits.
On materials and industrials, there were a few project funding and safety handling headlines that got people buying companies tied to domestic activity. And in energy, renewed M&A chatter and oil-related developments gave that patch a constructive day. That felt pro-cyclical overall.
There was also a research note from a big bank floating the idea of an upside to the S&P 500 of roughly 12%. And that sentiment circulating on trading desks seemed to grease the wheels. Even without a dramatic macro print, the market looked comfortable with the idea that policy might stay less restrictive for longer, or that growth would remain strong enough to justify current multiples.
Which is a delicate balance. Markets were basically pricing a scenario where inflation keeps easing and the labor market softens slowly, giving the Fed room. But the flip side is, if inflation or wages surprise to the upside, that Fed narrative could quickly change and sentiment could reverse.
Totally. No blockbuster economic releases drove the tape today, so it was mostly about positioning, headlines, and stock-specific catalysts. Speaking of which, a number of individual names stood out. Microsoft and Google benefited from cloud and deal headlines, and Goldman Sachs grabbed attention with its internal use of an AI model.
And in semiconductors, Corvo made the news via an 8K filing and saw active trading. That's a classic small or mid-cap volatility trigger, a procedural filing that gets traders interested. Vroom and Sunopta were other smaller names with filings that spurred action. When the tape is risk-on, those filings can create fireworks.
There were also pockets of crypto-linked stress that created divergence. Companies with direct crypto exposure underperformed, while the broader tech and AI beneficiaries held up. So it was a very idiosyncratic day underneath the broad headline numbers.
Sector-wise, technology and communications led, with semiconductors, software, and cloud getting decent flows. Industrials and materials benefited from the small-cap rotation. Energy had a nice day on renewed M&A chatter and some production cuts signaling. Real estate was interesting too. Industrial REITs and hotel names did well on continued logistic demand and travel recovery hints.
Defensive sectors like utilities and consumer staples lagged, which is consistent with a rotation into risk. Financials were mixed and generally underperformed, even though a few advisory banks or firms tied to deal flow held up. That cross-sector breadth, growth and cyclicals moving together, was the technical takeaway.
Speaking of technicals, when you get meaningful moves in the S&P 500 plus the Nasdaq and a stronger advance in small caps, that's a breadth positive signal. It suggests participation broadened beyond a narrow set of mega caps. Traders will be looking for follow-through over the next 48 to 72 hours, more net new highs across a wider set of names and sustained volume in leaders to confirm this is the start of something bigger.
So, what should listeners keep an eye on heading into the next session? First, the macro calendar. Inflation prints, producer prices, and payrolls will be front and center. Small surprises there can swing the tape. Second, Fed speakers. Any hint that policy is being reassessed will move rate-sensitive stocks fast.
Agree. Also watch earnings and filings, especially in small and mid caps. 8K filings and guidance updates can create volatility and either reinforce or undermine the small cap rally. And of course, any more AI or cloud headlines from major providers or banks adopting models could keep tech bid intact.
Don't forget commodities and energy flows. More M&A or production cut talk could further support that sector and related cyclical names. From a trading standpoint, after a decisive move like today, a measured approach makes sense. Trim into strength, watch leadership breadth, and be prepared for elevated volatility around key prints.
Quick practical note for listeners: when breadth improves, it lowers the odds that the whole market is just a one or two name show. But that doesn't mean every pullback is a buy. Look for confirmation, continued sector gains, rising volumes, and new leaders stepping up before getting too aggressive.
Love that. Let's wrap with the bottom line. February 6th was a constructive session. The S&P 500 was up about 1.9%. The Nasdaq 100 rose just over 2%, and the Russell 2000 jumped about 3.5%. The rally was driven by a mix of tech and AI optimism, small cap rotation, sector-specific catalysts like energy M&A, and materials project funding and supportive research and positioning.
But remember, the path forward hinges on macro prints and Fed communication. Keep an eye on breadth and corporate headlines. If gains persist across sectors and market caps, that's a clearer signal the optimism has legs. If inflation or wages surprise the wrong way, sentiment could flip fast.
So our takeaways. 1. Today's breadth was constructive, not just a handful of winners. 2. AI and cloud headlines continue to matter and are bleeding into corporate workflows. 3. Small cap strength suggests a willingness to rotate into cyclicals. But earnings, filings, and macro data will decide whether this stickiness lasts.
And 4. Be ready for volatility around incoming economic prints and Fed commentary. Trim into strength, watch for follow-through in leaders, and let breadth be your guide.
That's it from us today. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll catch you after the next close.